Yeah, right. We are recording this webinar for those that couldn't make it. So off we go.
Okay. All right. So everyone, thank you. Let's start with a disclaimer. First of all, please understand that Trade Ideas is not a registered investment advisor. None of the information in this webinar should be construed as an offer to buy or sell any kind of securities. This is for informational and educational purposes only. Okay. Let's rock and roll. Um, when you come to these webinars, we always want to make sure we give you something. And we've often found that if we wait till the end, then it's kind of silly because sometimes people have to go. And so we decided to kind of do this one first. One of the things we do to let people kind of get to know our technology, and we are, by the way, the only fintech company in the United States that I'm aware of that has an artificial intelligence consumer-facing company that we're going to talk to you about. This is why you're here, and it's going to blow your mind. But before we get there, register here at trade-ideas.com/cyberu. This gets you on the Trade of the Week email list. We provide everyone a free Trade of the Week that's based on our artificial intelligence, and this is a swing kind of longer term perspective trade so that people who aren't necessarily confined to their day trading or computer terminals, people who have other careers, which is, let's face it, all of us, can still kind of see what does this technology really do and what it's all about. This is kind of like an example of what you get. There's some information, why our artificial intelligence picked it, and it's our suggestion. So again, starting with the offer, a little bit about myself. I'm one of the few people in this business where I've had the fortune of being at the right place at the right time that allowed me to continue to invest professionally since 1996. You can see this on the slide. Here I am, 26 years
Look
old.
at that.
And
That's a newspaper. What?
I know.
What are those
What is
things?
that? Steve and I didn't even know each other then, but we will have met 2 years from that point in time. So this is kind of a little bit of a way back machine, but I was doing this basically right out of college, and I learned through, again, being at the right place, at the right time, having access to the right technology. A lot of everything in life is kind of timing. And I'm still doing it. So what you will see in this presentation, the technology that you will be introduced to is really the culmination of all the experience that I have had as a professional investor and then a CEO of technology companies for professional investors. So I still do this. I'm involved in equities trading every single day because for me, the only way to stay pure and be a part of the game and provide technology that has value is I have to feel what my customers feel. And that really is one of the things that separates the management of this firm from a lot of the other things that you will see in the world of financial service providers. So a little bit about our technology company. For those that, again, don't know, we've been around since 2002, and we've kind of evolved the technology, but we started with just an alerting service that really helped traders like myself and like Steve see things that they knew they wanted to see. Like back then, we didn't really know anything about data science, but we knew that we wanted to see stocks like breaking out, and we could describe it like, well, it's making a multi-day high, and there's a lot of volume. So that's what Trade Ideas focused on at first, and people like Scottrade and E-Trade and Lightspeed licensed our services, and we kind of worked as a business-to-business vendor. But all of that changed in 2015 when we realized that we were on the verge of something incredible, artificial intelligence. And my job today is to tell you really that almost everything that you know about finance, stocks, and investing has been wrong. So can you handle the truth? Because that's really the kind of thing that you really need to think about right now. Steve and I were discussing how timely the whole election situation is for this kind of webinar because regardless of your party affiliation, what did we learn from this election cycle is that all the data science got it wrong. Well, not all, some got it right, but all of the polling was bad. Like everyone thought one party was going to win, and it turned out something else happened. Why did that take place? Well, it turns out that the answer to the question of why is the same answer to why most of the things that you know about the market are incorrect. It's all about the data. If you have garbage in, like relative strength indicator or something else that you've seen and heard about forever and a day, then most likely you're going to get garbage out, a system that pretends to be good but doesn't really work. So we, over the years, evolved our technology, and the previous slide was saying we were on the verge of something big. We realized that the market is really beatable because we started to look at what was underlying some of these assumptions. Consider the fact that everyone is being indexed. In other words, your 401ks and your IRAs, they're all being put into indexes that hope to kind of be performing at the rate of the S&P. Well, have you ever thought about the fact that what is the S&P other than a bet on Western civilization? Think about that for a minute. There's no sophistication, you know, because the index can fall, and it can fall for 17 years. It can be in various cycles for long periods of time. What you're doing, and you're hoping, is that everything will work out okay in the end. And that is a bet on the success of Western civilization. The problem with that kind of bet is, well, not only is we all, none of it ends well, as they say, but the problem with that bet is that timeliness, like being at the right place at the right time. Imagine somebody who got into the market in 2000 at the age of 30, let's say. They are 46 right now, and they've been underwater for 16 years. They probably wouldn't be in the market already. They would have probably gotten such a bad taste, they'd be in bonds or real estate. So, but that's what's been shoved down the average investor's throat for millennia, because again, the name of the game is a money grab. They want you to think the market's not beatable so that you don't try to do it by yourself. So one of the things to know is that we all have problems. One of our problems is our eyes. So one of the ways that the industry kind of, and there isn't a Machiavellian plot, Steve, you and I talked about this forever, just kind of evolution is funny. It doesn't really favor the best or anything like that. Like, have you noticed that for anyone who is an active investor, you can notice that like there's all these different things, tools, like there's a relative strength index, there's a stochastic index, there's a moving average convergence index, there's a 200-day moving average.
What they're asking about for now is the Ichimoku cloud. That's the newest.
Right. Soon there will be a mushroom cloud, and then a horse face. And you guys all know about the cup and handle and the broomstick, but I digress. The problem is we like to attach patterns where there aren't actually any, because for millennia it really helped us to recognize things that put us in with people that we knew. Okay, it's just an evolutionary situation. But if you understand that things that you see on charts aren't necessarily literal, you can kind of learn to put away some of the things that cause your problems, like your ego, your panic, your overwhelmment with information. I mean, all these things just, they're in front of you, and most of us don't have the time to get rid of it. You know, how would you do it? If you could do it, the only way to do it would be like the Tiger Woods approach. And for you guys that don't know that, the rumor or the lesson there is that Tiger would hit 1,000 balls a day. 1,000 balls a day. An immense amount of practice. Most people just don't have that time. And then they come to invest and they pretend that somehow through like a newsletter or something else, they're going to get results that are better than anyone else. I mean, it's kind of crazy. You know, people go to college, Steve, and pay how much for medical school or law school? I mean, you're talking about potentially anywhere from $100,000 to
Six
$250,000.
figures of student debt.
6 figures of student debt, or even if not student debt, you paid 6 figures to learn something that may make you some money if you're lucky enough. And yet people approach investing very willy-nilly, like, I'll just get a newspaper or a newsletter and I'll just beat the market. It's not really how it works, and we'll show it and prove it to you. But if you were going to do it, you would have to do an immense amount of practice. Notice that picture you saw of me in the newspaper, I was, 26 years old then, and I've been practicing since that time, day in and day out. So how can you analyze a million unique, how do you do that practice? I said a million because today in trading parlance, even 1,000 trades is not a representative sample. We go back to that whole issue with the data science on the election and how they screwed it all up. They had terrible aggregation and terrible questions. So the problem is always right at the beginning. Forget the answer. Everybody wants to make money. The question, what is the question? Okay? And that's what I'm about to show you that we are able to answer using Trade Ideas technology. Let me quickly remove everything else. And Steve, again, just for my sake, make sure that everyone, and yourself included, can see the screen.
I see a channel, or I see a layout. Mm-hmm.
Yes. So for those of you that aren't aware, you're seeing Trade Ideas Pro. Trade Ideas Pro is our market interface, idea generation interface technology. This streams ideas to you. Everything that we talked about previously about, well, how do you find what to trade? Our technology is specifically designed to do that for you, and we do it in a Netflix sort of way. I'm not going to overwhelm you by jumping into different channels so you can see all the different windows. You can come and join us and see it. We're so easy to find and test, and I'll show you all the ways to do it. But look what we have. We have a full channel bar that lets you basically go to what's interesting, like earnings or options volume or volume in general, China, the cannabis sector, the biotech sector, stocks that have strong fundamentals. We have channels for active traders, metals traders, energy traders, trending traders, people that are into ETFs. I mean, we tailor this view because we know, having done this the longest out of anyone, exactly what you need to succeed. But I'm kind of jumping the gun, Steve, because I wanted to really explain to prove my point. We have all of this for you, but the question is ultimately, how do you know what to do? So what I wanted you to think about is which software lets you ask a market question. Like, for example, Steve, is the 200-day moving average a buy signal?
Oh, that's a broad question.
Well, if you were a pollster, you might have wanted to start there just to start broadly, just to get an idea of what you're up against.
All right, so a baseline.
Yeah, a baseline. So this is important, everyone, and the reason why I picked the 200-day moving average is because you've all been hearing about it probably since the day you were old enough to actually understand what the stock market is. Oh, this is at the 200-day moving average. Ooh, this just crossed the 200-day moving average. Did you see that 200-day moving average? It's a data point. So now we're going to ask our software, Trade Ideas, well, is this a buy signal? Here's how we do it. By the way, you won't even have to ask these questions, but I'll just show you that you're able to. We call it backtest a strategy, but it's basically ask a question. And here's the important part. What happens if a stock crosses the 200-day moving average and you're going to swing trade it for 11 days? This is the way that we approach investing because this is what most of us have to deal with in reality. So of course you can get very specific, like what time of day are you going to trade? Like in this case I can say, since I'm on the West Coast, I can trade right at the open or I can wait a few minutes. But I'm going to say I'm going to wait 15 minutes. So it's like, because I like to get my coffee, in the morning there's a lot of volatility. And then I also hypothetically can know, because I am also a doctor, that I'm not going to be really able to invest anything after 10 a.m. because I'm doing rounds at the hospital. So you can test it in a real life sort of way, and I hope you guys kind of get what I'm saying. Obviously, I'm not a doctor, but you can test any of these ranges, and then you can then ask questions like, well, how am I going to do? And I'll make it exactly 10 days, which is tomorrow plus 9 days. So I'm going to simulate me doing that to the entire market in between various price ranges that you can choose. Like I, for example, chose between, I think, $5.50 for stocks that trade at least 400,000 shares every single day. Okay, I can show you that if you go to the window, you can always go to the configuration part of it and see exactly what you're looking at. So these are like kind of like opening the hood of a car. You can say, oh, it's between 5 and 50, trades, average 3-month volume, trades 400,000 shares. Got it. Now you can change that to, let's say, 100 very quickly. You know, you just got to check from your passed away relative. And look, Disney all of a sudden pops in. And you can just retest the same question and compare the results. But the idea here is notice this approach. Notice what we're doing. We're not sitting there drawing lines on charts and going crazy with like things like, oh, you got this indicator here and 3 candles after that. I mean, this is just all silly stuff. That's not how data science works. So what you want to be able to do is now I can track and see what's going on. The two various scenarios, neither of which look good. But look at what we just did. We ran through 650 simulations here, 490 simulations here. Now we're kind of talking almost a little bit like a data scientist. And notice we have these calendar maps. So you can really dive into every single thing and see, well, what happened? What did the software show me and why did it do all of that? So we have all of this data. We are the best and the biggest as it relates to data, Steve. Data.
Yeah, not technical analysis, but data science. Data
Yeah.
science.
Yeah. Guys, I love to. I want to keep it like funny too, because you have to approach it with a little bit of humor. But this is how you do it. Okay, let's ask another question, Steve. Mm-hmm. Is up on gigantic volume a good buy signal?
How about let's do this? How about let's do this? Let's find out if that's the exact opposite thing to do.
Well, we can find that out for sure. But let's lift the hood real quick. Okay. So on this window, we're looking specifically, and this is something that you can do with our software, stocks that are 10 times their relative volume, meaning that whenever our software sees them, at that point in time, they're trading 10 times what they're normally trading. This is the kind of stuff like this. Look at Summit Materials over the last 1, 2, 3, 4, and 5 days. So you see that huge volume spike. Again, we are able to profile these questions the right way. So let's take a look and find out, Steve. Same kind of concept, swing trade concept. We're going 10 day, 9 day, tomorrow plus 9 days, which is 10 days out. And I hit simulate buy. Again, notice you're running through these hypotheticals like you're a cheetah. That's the difference between real technology and sitting there guessing, you know, at constellations and other things that people do, or the equivalent thereof when they're making strategies out of traditional technical analysis. We've jumped that like completely because you can see, and by the way, here's something interesting, Steve. Notice there is something interesting about that because the winners are bigger than the losers. That means like there's almost something you could potentially work with, hypothetically speaking. But look at all of this. This is not the kind of equity curve you want to follow. And we, as Steve said before, let's simulate it on the sell side.
Yeah, I mean, sometimes the best thing about this tool is to tell you when something was working is no longer working, and that's what's really hard for traders to do, is to recognize change. And when something was working, it's so hard to not go back to the same well over and over. But using data science and looking at the statistics, they're saying, what? Can't argue with statistics. This strategy has kind of lost its mojo. for the moment. And that happens a lot when we use the back tester on certain strategies. What was once working 6 months ago, can easily just kind of fall flat on its face 3 or 4 months later.
So Steve is actually kind of telling you exactly the secret sauce, which is the only system that works is one that's constantly adapting, one that's constantly evolving, one that's always changing its assumptions and testing those assumptions. If you look up the scientific method, it really talks about basically the scientific method is a method where you test hypotheses via assumptions through experiments. What we're doing here is exactly that. We just answered the question, is this a continuation or is this a mean reversion strategy? And what we see here is that, Steve, this is a mean reversion, but let's not jump into our Ferrari just yet. Notice what you would have had to sit through.
Oh, yeah.
Okay, so what this tells you is, again, that as your trading partners, as your technology trading assistants, even something that looks as amazing as this, and by the way, Steve, this looks pretty amazing, right? But pray tell, you still don't want to go at this just like that. So this is the difference between our technology and every other piece of technology on the planet. Now, the reason that Bloomberg doesn't do what we do and the reason that Reuters doesn't do what we do is because it's not easy. Now, of course, you're going to say to me, Dan, shut the hell up. Bloomberg can buy you 1 million times over. Of course. Of course. But the problem is this. It's kind of like the Mona Lisa. You know, when it was painted by the original artist, not everybody knew that it was this fantastic piece of art. And only later was it, I mean, I'm kind of making a very large metaphor, but the idea is that our stuff is so proprietary, the way we talk about the data and the way that we actually create our own data. Bloomberg does not have 5-minute highs, and they don't have the historical version of those things that we create in real time, like actual relativity. So what's really exciting about our approach to data, and Steve, I'm going to zoom in here for a minute, just so you can kind of, everyone can see. So what we do is this. And I want to keep it so simple so that everyone can understand, okay? Instead of trying to like draw pretty circles and whistles and all these things on charts, what we're looking at is the underlying data underneath all of here, like all of this behavior. But we look at it in a behavioralistic point of view. What we kind of say is that in terms of what's possible, anything can happen over here, and over here. Sometimes it can get to this point and then trade all the way down. Sometimes it can get to this point, gap down, and then trade higher. There's all these different things. So our approach, the Trade Ideas approach, is really approach of card counting. Much like the MIT card counting team, we decided that everything that I just did, okay, so I'm going to do one more of these. How about this one, Steve? This is a question that everybody always likes to have answered. Is beating earnings a good buy signal? You may ask yourself, well, how does Trade Ideas even know how to answer that question? Let me show you. So in our filters, we have what's called the earnings date filter, which basically means like how close to the earnings date is whatever it is that's happening in the stock. So what I'm saying is that yesterday the stock had earnings, because it's at least 1 day away from it, but no more than 2. And if you look at it, everything that we do, we have like these visual training aids. So you can see like, well, what happens if I expand this? Oh, look, you know, you can visually see how to set up your own questions. So for me, my question is, if today is Thursday and the stock beat earnings after the bell, I want to see it gapped up after earnings. That would let me know, Steve, isn't that a fair assumption? If it gaps up after the earnings day, you're assuming
the earnings are good.
You're assuming the earnings are good. So this is how that's done. A gap up of at least 0.5%. We go back to our 5 between 50, we can even say 100, and hit OK. So we did our little adjustment. Is beating earnings a good buy signal? Okay. Right click. Let's backtest the strategy. Same thing. Adjust our start time. I just had my coffee, and we don't add anything after 10 a.m. because I'm a brilliant surgeon. By the way, there's tons of advanced things that you can ask, but we don't need to do that for this example. We're just talking about answering basic questions that all of us want to know.
So in this case, the question is, if I buy a stock after it has good earnings and hold it for 10 days, what's going to happen?
Right. In other words, is beating earnings a good swing trade?
Is that a good strategy? Is that a good method?
Right. I mean, how many times, like, I think about going back to what I said in the bed of Western civilization. Let's face it, right? The guys that are analyzing stocks for Fidelity and all these other companies, I mean, what they're basically doing is they're trying to find good companies. And their basic assumption of what a good company is a company that beats earnings. Well, here's what that looks like over the last quarter. And there's a few things here and there. Again, not everything gapped up after earnings. So I'm just saying, for the data that we have, this is what it is. There were 67 stocks on this day. So this was an earnings day where a lot of companies had it, and you know, it doesn't seem to have any kind of statistical value. In fact, there's an interesting thing about setting up these questions. Stocks are kind of tricky, Steve, because it's like in the very, very, very short term, it's very noisy, like at the minute bar. Then at the 10-day level, it's also noisy because you're 10 days out, who knows what the hell. You know, the farther out you get, the harder it is to control anything because ultimately the future is unknowable. So what we do at Trade Ideas is we do this data science to find the sweet spot. Now what I'm going to do is I'm going to bring back our presentation, and I'm going to swig a little water while Mr. Gomez talks to us about this. And Steve, you know the order because this goes into what are we doing. So how is it that this technology that I kind of gave you a glimpse over, Steve, before you jump in, our AI, I mean, I didn't get to it because I don't want to overwhelm people.
Well, you set it up. You set it up. All that back testing is the foundation for the AI, and just testing one strategy at a time like Dan was doing, and then tweaking it and rerunning it and tweaking it and rerunning it, you know, it can take a lot of time, but trying to manage 40 strategies or so and figure out which ones have the hot hand and which ones are decreasing and should be pulled off of the starting lineup, that's really the beauty of what the Trade Ideas AI has done. And what this graph is showing is since January 1, the blue line of the S&P, SPY, has been, you know, hugging the flat line for the most part, with a little bit of volatility back there at Brexit and then some volatility recently with the elections. But the AI, the green line, is getting smarter and smarter, and what that represents is the aggregate total points taken out of the market, you know, with one share of stock, with the buy signal and the sell signal. And many of the people that are using the AI signal take the buy signal and then decide what they want to do on the sell. If they want to, you know, keep the stock for a swing trade because it looks good in their parameters or not. But that's right there is a graph of some serious metadata showing how card counting and probably how probable statistical analysis, which Dan is going to show you, can actually win over the long run. What you're looking at there is what a casino looks like. That's what the casinos are used to seeing. That upward line going from lower left to upper right.
Yeah, it's all of those things. It's the automation of that question asking. You know, I did that, I think, on purpose to really kind of put you in the mind of the computer. I was doing that, showing you these numbers, but we make that happen programmatically. And what I did, you know, and what took me like a minute to do 1,000, our computer does by the million to find the right data combination. There's a question from Delbert Cam. He said, so when you're anticipating the past, we'll repeat into the near future. Okay? And what we're saying is that, well, we don't know, obviously, but what we're seeing is we want to look for statistical pockets of probability, and we have the most data to slice to see where those pockets are. Steve?
Yes. This was a wonderful find on the internet a couple weeks ago about machine learning. So when we see charts and candles and hanging men and candles and hammers and upwards and downwards, Holly, which is our AI code name, the AI sees it differently. This is how Holly sees it. It's just one big plot graph as a place to start. That's the baseline of all the machine learning right there. Just splatter graph. And then
That's right.
machine learning takes it from there.
And then it creates an array that kind of, divides all of the trades into all these kind of groups. This is literally exact, because Steve, you've seen our spreadsheets when we have this. I mean, this is literally exactly what it looks like. And this is just a visualization. And then our AI says, oh, okay, so it's all of these things combining that create this green. It's got to have all these kind of different factors, and then it sets up, it creates the configuration for you. Again, goes through an extensive testing process. What ours is called is the Monte Carlo simulation, where we do a bevy of procedures to make sure that we are not fooling ourselves. We are our own biggest critic. In other words, what the pollsters and the politicians forgot to do was to really double check themselves. Everything we think that we get from the computer, we think is wrong. Everything that they got, they think is right. That's the problem. We started to really dive into what is the anatomy of a good probabilistic investment. And we found that they exist. They exist in a stock universe that you probably don't know as well, because you would need our technology to see it. But I will show it to you in this next phase. So today, our AI was doing its thing, and this is kind of one of the ways to visualize what we do. Here's the stock. We have a strategy called Count de Monet. I hope everyone understood the play on words there. It entered this stock statistically at 8:02. You could have exited 8 minutes after with a small profit, or continued for a much larger profit had you held on in the mode that was most value driven. And our software tells you what to do. Basically, it suggests when you should or should not enter, exit, and re-enter as well. That's not for this kind of webinar, but the idea is that you see that these are the signals. So entry price, 28.9. This was the actual, this is what our customers got today. This is today, Steve, right? No, I'm just kidding.
Unless today isn't the 10th, yeah.
Yeah. This was, again, the real life example. This is what it looks like. And ultimately, then the choice becomes, do you want to follow it or not? So it's kind of like your virtual card counter, your virtual analyst. Imagine if you were playing golf with Tiger Woods, surfing with Kelly Slater, having Einstein in your calculus class. That's how we kind of look at it. It's the best behavior. We model risk control. Our software tells you when to get in, but it also tells you when to get out. Suggested course of action. It's like a full gamification suggested course of action, and it happens all in real time. But that's actually not even the best part. I mean, that is kind of the best part. This is the channel that we talked about, and obviously some testimonials. But really, the last part that I want to talk about before I jump back into the software is this concierge approach that we have to investing. So here's what we know what it takes to win. You have to have a community, which we have. We not only are a subscription-based service, but we are also a media. So we have our own webinar that we run from the open to the close, where we have a trading floor leader, Barry Anderson, who's in Canada. He's been a fantastic member of Team Trade Ideas, and he shows you he's a very successful trader. He shows you his kind of best use case examples in real time and real life. Then you're able to get more out of the AI. So you can see how people use it, how you can discretionarily trade around it, And it's a community that not only sits there just for the money, but there's support, there's an exchange of strategies, a living, breathing, vivid organism, and the best part is it's free. Because we encourage just education, and we believe the education for us, we have the luxury and the privilege to be able to subsidize the best education on the market with our trading technology. You do not need to be a subscriber to be a member of this trading room, and it's very easy to find from our homepage. So, Delbert, I'm going to get to your question in a second. Let me see here. Okay. So one of the other things that's kind of exciting, you know, I'm so excited about the tech, I kind of keep forgetting to tell you just a little bit more about the company. We, from our data, we are the fastest growing fintech subscription service in the U.S. Since we started providing people the artificial intelligence, which, you know, does this kind of behavior, this is what our customers have told us about their appreciation of it. This is how much our subscriptions have grown. So it's a very exciting thing that you're seeing, and this is the easiest way to get involved is this TradeIdeas.com free trade of the week. Steve, on the first one, did we have a different URL?
We did, and I've actually fixed it since then. So this is the correct one. Yeah, the last one was an older one.
Sorry about that. So it's trade-ideas.com/free. That gets you the AI-generated trade of the week swing trade, so that hopefully when you get it, it won't be doing what the random one that I showed you about the 200-day moving average or the earnings or whatever else people use actually does.
Also,
So,
Dan, if people wanted access to figure out how to get into the live trading room that's free that Dan just spoke about in the chat window on the toolbar of GoToMeeting, you can open the plus window, expand that window, and there's a link that I've dropped in there that will allow you to create a username and a password, and you can join that live free trading room just directly on that link.
right, in the chat, very easy to do. One of the best things about us, because we've been in business since 2003, we've, again, been very fortunate to have spoken to so many individual investors, and we kind of know what it takes to win the best out of anyone, we feel, because, again, we've been there, we've done that, and we still do it to this day. You know, we're not trying to show you our Ferrari. We're here trying to show you our technology so that you can get a Ferrari. That's really the difference. So let me get back to the software. And so Delbert had asked a question about stop parameters. One of the coolest things about our tech, and I'm going to get rid of these questions and I'm going to show you some exciting, like remember we talked about how there's a different universe where alpha exists, and what I'm going to do is I'm going to show you that universe. Okay, it's not the FANG stocks. Okay, the FANG stocks and all the other things that people try to kind of steer you into are the same problematic assumptions that we talked about from the election pollsters. You know, it's just old stuff regurgitated, regurgitated, and regurgitated. Earnings, schmearnings, whatever, you know. In today's world, technology is digested at light speed. Information goes from source to Twitter to Instagram to Facebook instantly, and we pick that up. That's what we're here to do. So, Delbert, you had asked about stops. For every single stock, anytime you want to look it up, so let's say you want to look at Apple, we give you a situational AI-derived smart stop number that takes into effect the volatility and all sorts of other things having to do with Apple. So every stock will have like a slightly different stop price, again, based on its behavior. So Intel was 37, Apple was what it was. Let's look at Microsoft. Microsoft is 75. Did I do Intel already? 37. Cisco. Whoops. Cisco. 48. NVIDIA, somebody had asked about that. 75. So again, you kind of see that there's like these behavioral characteristics and things like that. And by the way, I don't know what happened to NVIDIA, Steve, But after hours, it went from 68 to
Earnings.
78.
Yeah. Somebody
Okay.
mentioned it earlier in the questions.
Okay, so you know what's great? Whoever mentioned that, I'm glad that you did. So here's what you should say. Based on the data, the idea here is to probably actually short it, but I mean, again, it's much more complicated than that because you would have to test it for specifically stocks that are gapping up that amount, because maybe after a certain threshold, once you've gone up a certain amount, you're going to keep going. So we allow our software to do all of that, but the thing that I want to make it sure that you understand is you talked about NVIDIA. What would you do in NVIDIA? Well, NVIDIA is a sample of one. You don't do anything with NVIDIA. You put NVIDIA's data into a bucket and hope that it helps in some way, shape, or form. So here's a window that we have called the Trend Change Lubricant Factor window. In this window, we're trying to pick up stocks that are appearing to exhibit a behavioralistic trend change according to our AI. That's why it's called AI scaffolding. So look at these names, okay? It's probably things you have never ever heard about, but look at the percentages. Look at what's happening here, the possibilities. When you look at these stocks, what you find is that you could be in the midst of a pretty significant move in the opposite direction. That's why it's called the trend change.
Well, you know what's interesting about that one? If you scroll over, I'm guessing there's a column on this one that's a short float, right?
Yeah, let me, where was I? Was I on, which one was I?
It doesn't really matter. There's the stocks that you're showing in the trend change lubricant. There's a lot of short squeezes going on right now.
Yeah, this one doesn't have the data, but for sure. And again, not every stock you can get that information.
But if you scroll that bottom horizontal bar on the green, yeah, at the very bottom, scroll over, and there's probably going to be there it is, market float share, and where's short float? Probably should be even over more, I guess. I thought.
Yeah, I might have just
one. You might have deleted it.
Missed that one because it would have shown up here for that stock.
Nonetheless, that's a great scan for the trend change lubricant breaking right now with a lot of short squeezes. That
Here's an example, one that works for a stock that's really been incredibly high. And look at the percentages, from 147 to 278. These are the things that investors, astute investors, Warren Buffett style investors, this is where we're at. Okay? We're not trying to play Western civilization because that's random. You want to be here because you want to find the interesting things that make a stock that's been doing this all of a sudden start doing that. This is where the behavioral analysis comes. Instead of technical analysis, we're behavioral scientists and we use data to find the components that come together that make the move go up. And as Steve said, short float is a big part of it. The size of the float. Let me show you guys something. So Steve, people probably don't pay attention to this that much, but look at Apple. Okay, the float for Apple is 5.33 billion. Let's look at Intel. The float for Intel is 4.72 billion. Let's look at Cisco.
Can I give you the punchline I wanted to put in?
Sure.
Put in CWEI. Look what that thing's done on the daily chart. 10 million shares in the float. At one time, there was about 70% short. They're slowly whittling it down to 44% short. Now, that was caught way back down there in that back turn on that trend change lubricant. We were talking about it week after week on our webinars. Classic example.
This is what we're about, guys. Look at this stock. This is lifetime returns here. Look at the move from $8 to $109. Data scientists, who we hope that we are, what we start doing is we start looking at ratios of important data points. Like, for example, what's the revenue number as it relates to cash? What's the market cap as it relates to the float? All these things, we don't know if there's anything to it, but we find the ratios and our computer allows us to slice and dice it into this, what we showed you before, where we find out how do we extract the alpha. And this is where it hides. It hides where you're not looking. And you're not looking because the media and everything else is designed to keep you out of this. Why should you get rich? That's not what they're about. You can see, again, from everything that's just happened, that many people are simply regurgitating the same thing that they regurgitate. Well, this is the new market. I mean, CWEI, Steve, I mean, I love seeing that, you know, because, I mean, do you want to believe that you can make returns in the stock market? I mean, there is no real estate investment that beats CWEI that I'm aware of.
Not recently.
No, not one that you can get in and out of. And by the way, I swear to God, Steve, CWI was one of our trades of the week, wasn't it?
It was. It's actually the best one that we've put out to date. It's up almost 400%.
Yeah.
But those are the kind of ones we're looking for.
Right, and this is why we call it trend change lubricant. These things, we're hunting, like look, statistically speaking, right? How beautiful did it look here? Failed. Tried it again? Failed. Tried it again? Didn't fail, didn't fail, tried to fail. Whoa! This became a really significant price level. And that's what our computer studies. I mean, so when we're talking about learning, we constantly ask ourselves, we don't want to know what works because we know the answer. It's nothing. Constantly bob and weave through mass amounts of data to find us what looks the best. Card counting. That's the answer of how you beat the market. And there's only one company in the world that has this technology to count cards the way that we do, and that's Trade Ideas. This is what we are here to present to you. This is the whole reason that you are here. I feel like, Steve, you know, let's kind of make sure all the questions are answered, because I don't know if there's anything else that I could emphasize. You know, I don't want to overwhelm people.
No, it's you've given them a nice entree. We've shown them how to come into the live trading room, which is free, ask some questions, watch in real time, see what people are doing and talking about, and kind of hear the lingo, maybe even ask Barry a question. Attend our webinars, Trade of the Week webinars. We make it very available.
Yeah, let me go to www.trade-ideas.com. I can show you, this is our homepage. Obviously, we're all about the artificial intelligence. If you click here, you can go to our trading room. This shows you the price of our subscription services, but again, you don't have to be a subscriber. Join our community and learn about what this is. We do not need you to be a subscriber, and we don't want to push you to have to do it. But if you are going to be an investor and invest actively, we are by far the premium technology for self-directed investors. In fact, there's really nothing like it on the market. We're the McLaren to a Ford GT.
I'll take that.
Yeah. Okay, so are there any questions? I feel like we're, as far as I'm concerned, we're basically done. You can reach us on Twitter. I am at TradeIdeas1, and our formal Twitter handle is at TradeIdeas, and Steve is at TodayTrader.
That would be
we have a Facebook page. Please go there and like us. And if you want to ask us any questions, please shoot us an email directly to info@trade-ideas.com or steve@trade-ideas.com or myself at dan@trade-ideas.com. This webinar has been recorded and it will be available, Steve, correct?
That's right. And join Trade of the Week. Back up one slide just one more time in case they missed it. You know, the tradeIdeas.com/free, I believe it is. And get the Trade of the Week. And hopefully we'll find another CWEI here in the near future. But that and the links that Dan showed you for the free room, come on in and just kind of get a feel for what's going on. And
Xavier, all of this stuff is free. Why don't you come into the room first, see the technology, the Trade of the Week is free, and then you'll know if it's crap or not. And once you subscribe, you know what you want. There's no issues. We probably, as a firm, I mean, we do refund people that make mistakes and et cetera, but we just have a very small refund part of our business because people really know what they want. And consider this, we provide artificial intelligence at the cost of $5 a day. So think about that for a minute. Yeah, this is the thing to get our free trade of the week, and this is our contact information. We really want to thank you for taking your time with us this evening. Please have a great weekend and the rest of your evening. Steve, thank you so much for taking your time.
All right.
And yeah,
Talk
take
to you
care.
later.
Thank